The New York Stock Exchange, NYSE, reports a positive pre-market outlook, with the S&P 500 poised to reach record highs following a strong performance in the previous session. This optimism is fueled by news of a framework agreement on a trade deal between the United States and China, as announced by President Trump. The agreement, reached after initial discussions in Geneva, aims to prevent the escalation of reciprocal tariffs, which had been a looming threat to global trade stability. This development is likely to bolster market sentiment, as investors anticipate a reduction in trade tensions that have previously weighed on global economic growth. In addition to trade developments, the University of Michigan is set to release its final June Consumer Sentiment Index, which is expected to confirm a significant 16% increase from May's figures. This surge in consumer confidence is indicative of a more optimistic economic outlook, potentially leading to increased consumer spending. Meanwhile, COTWO Advisors has launched CTWO, the first exchange-traded product, ETP, offering physical exposure to the European Union emissions trading system, reflecting growing investor interest in sustainable and environmentally focused investment vehicles. Overall, these events suggest a cautiously optimistic environment for investors, with potential for continued market gains amidst improving economic indicators and geopolitical developments.
In May, U.S. inflation experienced a slight increase, with the Personal Consumption Expenditures (PCE) price index rising by 2.3% year-over-year, up from April's 2.2%, and the core PCE index, excluding food and energy, climbing to 2.7%, surpassing the Federal Reserve's 2% target. This uptick in inflation, driven in part by the services sector, occurred despite ongoing tariff concerns from the Trump administration, which have led to price increases in specific goods like toys and sporting goods. However, prices for new cars, airline fares, and apartment rentals saw declines. Consumer spending contracted by 0.1%, marking the first decline since January, alongside a 0.4% drop in personal income, reflecting reduced expenditures on automobiles, gasoline, and food services. This decline in spending, coupled with a rise in the personal saving rate to 4.5%, suggests increased consumer caution amid inflationary pressures and economic uncertainties linked to trade policies. The Federal Reserve, led by Chair Jerome Powell, has maintained a cautious approach to monetary policy, emphasizing the need for more data before considering interest rate adjustments. This stance contrasts with President Donald Trump's calls for immediate rate cuts to spur economic growth, leading to speculation about potential changes in Fed leadership. The economic data has influenced financial markets, with Treasury yields rising and the U.S. dollar strengthening against major currencies, while equity futures face pressure, particularly in interest rate-sensitive sectors. This complex economic environment presents challenges for policymakers as they navigate the interplay between inflation, consumer behavior, and trade policy impacts.
The financial landscape is witnessing a bold initiative by the crypto industry to revolutionize the stock market by leveraging blockchain technology. Major players like Coinbase Global Inc., Kraken, and Robinhood Markets Inc. are spearheading efforts to tokenize stocks, aiming to make trading shares as seamless and instantaneous as sending a text message. This initiative promises to eliminate extended settlement periods and facilitate cross-border transactions around the clock. However, significant challenges persist, including custody and counterparty risks, as well as the intricate legal and regulatory frameworks governing traditional stock markets. The process of tokenization involves creating digital representations of real-world assets on a decentralized network, which, despite its potential, faces skepticism over its feasibility and demand. The push for tokenized equities is part of a broader movement to migrate real-world financial assets onto blockchains, a market projected by McKinsey & Company to reach $2 trillion by 2030. While tokenizing simpler assets like U.S. Treasuries has seen success, the complexity of public equities presents a formidable challenge. Regulatory bodies, including the Securities and Exchange Commission (SEC), are cautiously observing these developments. The SEC's Crypto Task Force, led by Hester Pierce, has expressed openness to trial runs in controlled environments or sandbox structures to test the concept under relaxed rules. Despite the industry's enthusiasm, the path to a unified and liquid market remains uncertain, with past efforts like the Mirror Protocol on the Terra blockchain serving as cautionary tales. As the Depository Trust and Clearing Corp plans a pilot involving institutional players, the future of tokenized stocks hinges on overcoming regulatory hurdles and establishing trust in these new financial instruments.
The potential passage of the GOP tax bill, championed by former President Donald Trump, could lead to significant increases in energy costs across the continental United States. According to an analysis by Energy Innovation, the bill proposes eliminating tax credits that currently support the development of wind and solar energy projects, which are cheaper alternatives to fossil fuels like natural gas and coal. These credits, originally implemented during the Biden administration, have been instrumental in promoting the growth of renewable energy sources, thereby helping to keep utility bills lower. The removal of these incentives would likely result in higher electricity and transportation costs, as states would need to rely more heavily on natural gas for power generation. The impact of the proposed tax changes would be particularly pronounced in red states such as Oklahoma, South Carolina, and Texas, where energy costs could rise by up to 18% by 2035. These states have been poised to expand their wind and solar capacity significantly under the existing tax credit regime, potentially becoming major exporters of renewable energy. Without these credits, however, they would need to revert to more costly and carbon-intensive fossil fuels. Meanwhile, blue states, which have been more proactive in integrating clean energy into their grids, would experience smaller increases in energy costs. The broader economic implications include increased consumer energy bills and a potential slowdown in the transition to a cleaner energy economy, as the cost of natural gas and the construction of new gas-powered plants continue to rise.
Ultragenyx Pharmaceutical Inc., NASDAQ Rare, saw a 2.2% increase in its stock price in pre-market trading following the announcement that its investigational drug, GTX-102, apazunersen, received breakthrough therapy designation from the U.S. Food and Drug Administration, FDA, for the treatment of Angelman syndrome. This designation is intended to expedite the development and review process for drugs demonstrating significant improvements over existing therapies for serious conditions. The FDA's decision was based on promising results from a Phase 1/2 study involving 74 patients aged 4 to 17, which showed sustained developmental improvements over a 3-year period, particularly in children with a full maternal UBE3A gene deletion. The designation underscores the urgent need for effective treatments for Angelman syndrome, a rare genetic disorder characterized by developmental delays and neurological issues, and highlights the potential of GTX-102 to address these unmet medical needs. Ultragenyx is advancing its clinical efforts with the ongoing global Phase 3 Aspire study, targeting 120 children with confirmed genetic diagnoses. Additionally, the company plans to initiate the Aurora study in 2025 to explore the drug's efficacy across various genotypes and age groups. These developments could position Ultragenyx as a leader in the rare disease therapeutics market, potentially accelerating the path to commercial availability and impacting the company's future growth trajectory, as reflected in the positive investor sentiment.
The recent reduction in interest rates has posed a challenge for retirees heavily reliant on fixed deposits, FDs, for stable returns. As interest rates decline, the attractiveness of FDs diminishes, particularly for those planning new investments or renewing maturing deposits. To mitigate the impact of lower rates, retirees can explore alternative strategies such as investing in small finance banks, SFBs, which often offer higher FD rates compared to larger banks. Importantly, deposits up to 5 lakh rupees in these banks are insured under the Deposit Insurance and Credit Guarantee Scheme, ensuring a level of safety comparable to larger banks. Additionally, retirees might consider employing FD laddering, a strategy that involves splitting investments across multiple FDs with varying maturities. This approach allows investors to benefit from prevailing rates and quickly capitalize on any future rate increases. Diversifying into other low-risk investment options, such as small savings schemes and low-risk mutual funds, can also provide a buffer against falling FD rates. Despite the current environment, FDs remain a viable option as long as they continue to offer a positive, real return above inflation, ensuring retirees maintain their purchasing power.
The significant financial development has emerged as a UAE-based fund, Aqua One Foundation, has invested $100 million in digital tokens issued by World Liberty Financial, a crypto venture associated with the Trump family. This acquisition makes Aqua One the largest publicly known investor in the tokens, known as $WLFI. These governance tokens, currently non-tradable, grant holders voting rights on changes to the business's underlying code, with World Liberty indicating plans to make them transferable. The investment aligns with Aqua One's goal to accelerate the creation of a blockchain-powered financial ecosystem centered on stablecoins and tokenized traditional assets. The partnership between Aqua One and World Liberty aims to identify and support promising blockchain projects, with an eye on expansion into South America, Europe, and Asia. This move is part of a broader strategy to leverage blockchain and artificial intelligence to transform the digital economy in the Middle East. Despite its significant financial involvement, Aqua One maintains a low online profile, with limited social media activity and a recently established website. World Liberty, launched shortly before the 2024 U.S. presidential election, has generated substantial revenue for the Trump family business but has faced scrutiny over potential conflicts of interest. The venture's broader mission is to democratize access to financial services through digital tokens, bypassing traditional banking intermediaries.
In April 2025, Canada's real GDP experienced a slight contraction of 0.1%, primarily driven by a significant downturn in the manufacturing sector, which faced its largest decline since April 2021. This downturn was largely attributed to newly imposed U.S. tariffs on Canadian goods, including steel, aluminum, and automotive products. The goods-producing industries overall fell by 0.6%, with manufacturing dropping by 1.9%, durable goods decreased by 2.2%, and non-durable goods by 1.6%. Despite these challenges, the services-producing industries saw a modest growth of 0.1%, supported by increases in finance, insurance, and public administration, with the arts, entertainment, and recreation sector also experiencing a notable 2.8% gain, partly due to the success of Canadian NHL teams in the playoffs. The advance estimate for May indicates a continuation of this trend, suggesting potential challenges for the second quarter, following a 2.2% GDP growth in the first quarter as businesses increased production in anticipation of tariffs. Economists from TD and CIBC have expressed concerns about the broader economic implications, highlighting the risks posed by the tariffs and the potential need for further interest rate cuts by the Bank of Canada to support recovery. The central bank, which recently held its benchmark interest rate steady at 2.75%, is closely monitoring the situation and will reassess its monetary policy at its next decision on July 30th, amid ongoing uncertainties surrounding the tariff dispute with the U.S.
U.S. Treasury Secretary Scott Bessent announced that the current administration's trade agenda, which involves negotiations with 18 key trading partners, could be finalized by Labor Day, September 1st. This development follows the successful completion of agreements with the UK and China, signaling a strategic push to resolve trade uncertainties. Commerce Secretary Howard Lutnick indicated that the White House aims to secure deals with 10 major partners by the looming July 9th deadline, when the pause on reciprocal tariffs imposed in April is set to expire. The administration's focus is on categorizing these deals to streamline negotiations and ensure a favorable outcome for the U.S. economy. The potential conclusion of these trade agreements could significantly impact market sentiment and economic policy as the U.S. seeks to strengthen its global trade relationships. The resolution of trade talks might alleviate some of the economic tensions that have affected stock markets and international trade flows. However, the specifics of these agreements and their implications for various industries remain to be seen, as the administration has not disclosed the countries involved in the upcoming deals. The outcome of these negotiations could influence U.S. trade policy and have broader implications for global trade dynamics.
The Chinese electric vehicle EV market witnessed a significant development as Xiaomi XIACY officially launched its new vehicle, dubbed the Model Y Killer, intensifying competition with Tesla. TSLA. Within the first 3 minutes of the launch, Xiaomi secured over 200,000 orders, underscoring strong consumer interest and highlighting the increasing pressure on Tesla's market share in China. This aggressive entry by Xiaomi is expected to reshape competitive dynamics in the EV sector, particularly as companies race to innovate and capture market leadership in one of the world's largest EV markets. In parallel, the Hesai Group, HSAI, a leader in the Chinese robotaxi sector, experienced a notable stock surge, climbing nearly 20% on the same day. This rise comes as Tesla initiated a limited robotaxi ride-hailing service, indicating a growing focus on autonomous vehicle technology within the industry. The developments signal a robust and rapidly evolving landscape in China's EV and autonomous vehicle markets, with potential implications for global automotive strategies and investments. Investors and market analysts will likely monitor these shifts closely, assessing their long-term impact on market shares and technological advancements.